The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the April 16th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary Thursday. Of course, let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned is possible. But what's scheduled is real. And I really want to thank you for scheduling your time with me here this morning. I'm honored by your presence, and I'm here to serve you. Feel free to dial on in at 877-927-6648. Of course, internationally, you can call in at 727-445-1044. That way, you and I, we can go hunting for bulls and bears out there. Remember, if you've got a question, somebody else has got that exact same question. So make it a random act of kindness. Go ahead and call on in for them. That's the way to kickstart your day on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 30 points at 18,082. S&P off about 5 points at 2102. Composite down 7 at 5,003. Russell's off about 3 points at 1272. The DAX struggling this morning off 177 points. The FTSE down 25. Gold is just down a bit, a hair, down a buck. Silver is off 3 pennies. Light sweet crude is off $1. Leading the charge, the upside, it is Party City. No, Party City. Hey, how do you gotta like that? What is Party City? Must be a retail store or something like that. Or do they just like to party? I see they're out of the gates here with their IPO. So congrats to them throwing a party at the New York Stock Exchange. We got Netflix, though. They're throwing a big party out there. I don't know if you got their invitation, but they're up 68 buckaroonies this morning. That's up 14%. Not too shabby for a $500 stock out there. Panera Bread also off to the races, but that's running right into a line of resistance. I believe, if I recall correctly, that's up 18 bucks, up 11%. AGO's Pharmaceuticals up $8 and change, up 9%. Receptos up 4.5%, $7. Granger WW up $6. Philip Morris up $6. Shake Shack shaking things up a bit, up 7.5%, up $4. You've got to the downside, BlackRock BLK off $10. You've got Sherwin-Williams that's painting the town red this morning. That's off $7.57. Pacira Pharmaceuticals, that's down $7 as well. SanDisk off $5. Core Laboratories off $4. Mohawk Industries down $3.47. Well, let's go ahead. Let's begin our day. Let's go take a look at the ETF indices out here. Let's go see what's going on there. Let's start off and take a look at the QQQ ETF out here. Just simply been struggling. While everybody else is at Party City, the Qs, not so much. Now, the Qs here have not been able to get back up to that March 20th level. That's a swing point that was formed that's got 31 million shares. The bottom of that is 108.51. The actual high that we've seen thus far on this leg up has been 107.36. What I gave you the wrong number. 108.51. That was the low. We have not been able to get up there. Last time up was April 13th. Only 17 million shares out there. Yesterday, about 21 million shares, but still not been able to get into that swing point. No real reversal or anything like that is in place here just yet. Just kind of very lethargic in its ability to get up into its swing points. Very lethargic. I mean, if we go take a look at, as an example, let's go just take a look at the New York Stock Exchange. Take a look at the NYSE, the wider swath of the market, much stronger than the QQQ ETF out here. Why do I say that? I say that because I've lost my cursors out here. Good Lord Almighty. Let me switch over to a different chart here. I hate when that happens, but let's face it. Sometimes it happens. You got to have a good backup plan. Now, here's Stevie's backup plan. Let's go take a look at the New York Stock Exchange. Here's the swing point that it was dealing with. Its all-time swing point high was February 25th. That high was 1142.56. Guess what happened yesterday on the way to Party City? You saw the New York Stock Exchange close above that level. Boy, that is pretty strong out there. Closed above that level, and now we switch back. We take a look at the summation index out here. And at this stage of the game, the price oscillator is still above the zero line out there. It's close, but still no cigar. If we do see a crossing through that, you will see price get back inside that February 25th swing point of 11,142.56 out there. But right now, things are still bullish. Needs, I don't remember how many net declining issues today, 11 something, 12 something, somewhere in that range out there. If it does, the price oscillator gets below the zero line, well, then that says that what we took a look at in the first hour, which was the Arthur Murray dance studio pattern of the S&P 500, that says that we should see lower price for at least through the early part of next week, and maybe a bit beyond that time frame. We saw that the Qs were struggling out here. Let's take a look at the larger swath of the NASDAQ. Let's take a look at the NASDAQ composite. It was able to actually get up into its swing point from March 20th, but unlike the New York Stock Exchange, it has not been able to overtake that high, which is priced out at 5,042. And it was that a real problem for the composite? Well, if we go take a look at the NASDAQ composite out here, $COMPQ, and we take a look at its monthly charts out here, we're going to see where its levels of significant support and resistance are. Well, how about that? The 5,035 number is the significant area of resistance. What have we seen thus far during the month of, what are we in, April? We've seen another test of that 5,035-ish level with price getting to 5,024. Remember, we use these horizontal lines of support and resistance as guidelines. They don't have to be to the exact number. It's a visual thing for us. And we can see that is a significant visual sign, 5,036, with regard to its struggle to get up over that. Does that mean that it's going to turn around and it's going to fail? And no, it doesn't mean any of those things. It just simply means it's struggling. It's kind of like I liken it to being a pole vaulter. Can you imagine being a pole vaulter and or whatever you want, and you set a height, and you're a young athlete, and you're learning how to pole vault, and you've got you start off at 11 feet. Of course, the pole's more than 11 feet long, but nonetheless, you get up over that 11-foot mark, and then you go on to 12 and 13 and 14 and 15, and finally you get up. What is the pole vault height that they are after these days? Is it above? It used to be like about 18 feet or something like that. I don't know. But nonetheless, the market here has its own pole vaulting techniques, and that bar is at 5,036. You get above it. I'm not talking 5,037. You get above it, and that says that price can then gravitate up into the next level. Next level in it is 59.50. Otherwise, price is just simply struggling out here. And so, price for the most part inside the stock market has been struggling all year long. But we can see where the resistance level is in the composite. Now, what are we watching on that's a monthly chart? What are we watching for in the daily chart? We're watching to see if the price oscillator can get down below the zero line out there. What it would need today, I think I did write that number down. What it would need inside the composite, for those of you that like to keep score in your fantasy football game, the NASDAQ needs 972 net declining issues today, whereas 1,253 inside of the New York Stock Exchange in order to change that price oscillator below zero. When that happens, folks, it tells you that there's been a shift in the marketplace. It doesn't tell you for how long. It tells you there's been a shift in the marketplace. And, would that help you out in your at least understanding what the markets are doing out there? I believe the answer to that is yes. Now, let's go back. So that was taking care of a look at the Qs and then a little bit of jumping around. What we know about the Qs, they do not have the energy to move to the upside out here. If we go take a look at the Russell 2000, whole different story out here. Strong like bull. But as you and I know, what the Russell 2000 needs in order to be really strong like bull, it needs the composite to go along with it. And we haven't seen that. That's what has really been the struggle inside the IWM. Of course, that's just simply my opinion out here. And that struggle is that the IWM is just simply communicating to you and I that it wants to get on that wall. You need it on that wall. Well, we all need it on that wall. And that wall eventually takes the Russell 2000 to the 1350 mark. Well, the Russell 2000 is doing everything in its power, and it cannot lift this tide higher. Now, the New York Stock Exchange can certainly help along with it. But with regard to where the market does want to go, the Russell 2000 is saying to the north. To the north. What did it do yesterday? It closed above a swing point for a second time in the last several weeks. It closed above this swing point from March 23rd that only had 17 million shares. Now, if March 23rd was a holiday, hit me upside the head. It was not. And the volume yesterday inside the IWM, 37 million shares. Now, folks, that's how you take out a swing point. Was there wide price spread? No. Was there a decent price spread? Yes. Was it volume above a swing point? Yes. Is it the second time that we have a confirmed A to B equals C to the upside? Yes. Where is price headed to? Eventually headed to 129.23, 131.78. But look, the Russell cannot do all this work on its own. It doesn't mind being in front. It doesn't mind you drafting behind it. And that's really what you want to see from a bull side of the markets. But it's not going to lift everything to the upside out there. It needs that NASDAQ composite to really push it. Needs that real strong, when you're drafting, if you watch these NASCAR races, and I don't watch them too often, but if you do watch them, the guy that's in the lead that is being drafted gets pushed forward faster with somebody really strong behind him. That's really the same thing that we take a look at our NASCAR stock market out here. It's the same thing between the number one car, the IWM, and the number two car, the QQQ. We don't have it as we speak right now. Steve Rhodes with TFNN. I'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 32, S&P's down about 5, Composites off 9. Looks like some good hockey games to kick off the playoff season last night. I didn't get a chance to catch any of the games. I went up to visit my youngest, who is graduating from the University of Florida in a couple weeks, so spent the day with her, but that required 8 hours worth of driving, and then we spent, of course, 4 hours worth of driving on a golf course out there and just hanging out. So that was good. But by the time I got back, I would say it was pretty bushwhacked out there, about 11 o'clock or so, kind of late, and was a long, fun day out there. But looks like quite a game in Nashville last night. The Blackhawks and Nashville looks like they went to the second overtime out there, so that's pretty cool. I don't know how far into the second overtime, but some good games tonight. Tampa Bay and my Detroit Red Wings, of course. I'm a Tampa Bay fan as well, so it's nice to be in a game and a series where really, to a certain extent, whoever wins, it's still your team that moves on, so that's a good thing. Nonetheless, let's go take a look at the teams and what's going on inside of the marketplace out here. Let's start looking under the covers a bit. Let's go take a look at BlackRock. I know I didn't finish. Let me finish off the ETFs for you. We stopped at the IWM. Let's go look at the SPY, see what it's doing. Now, the SPYs here yesterday, the SPYs actually, I believe, getting into the swing point of February 25th. Low is 211.22. Let's put a line across our screen out here. 211.22. No, it did not. That swing's got 73 million shares, but you were pushing up with 99 million shares. Pretty good. It's a sign of the that it wants to actually try to get up and test that level. We'll see if it can do that 211.22. The pullback so far this morning, only with 15 million shares. We've been trading for an hour. You got 15 million shares to pull, and we know that we've got a lot of volume that comes into the market in the first hour of trading. Look, just take 15 million, multiply it times 6. I know we got 6.5 hours worth of trading, but just multiply it times 6. You're at about the 90 million. You're less in its volume. It's not going to be straight line based on the first hour. Shouldn't be. And you had 99 million moving up yesterday. Guess what? Inside these SPYs, you've got a light volume pullback as we speak right now. And that's its message. Let's take a look at the Dow Diamonds out here. Dow Diamonds yesterday actually getting up and testing that swing point low from March 2nd, which was 181.37. Now, that only had 3.2 million shares out there. And yesterday, you pushed into it 4.3 million shares. So pushing into that swing point with volume. An hour worth of trading, 900,000 shares so far to the downside. Now, 9 times 6 is 5.4. So it's actually pulling back with similar or more volume than yesterday. Of course, we know we can't use these straight line method of volume accounting out here, but just helps us to get a little bit of a guideline. So far, we've seen a rejection of that swing point, but does suggest that price will be back up there at some point in time. BlackRock, BLK is the ticker symbol. Looks like they're out with earnings here. Adjusted earnings per share 489 versus 443. Net income of 822 versus 756 million, and 2.7 billion in revenue versus 2.67. Nonetheless, this thing is getting smoked this morning here. Key reversal going on inside of BlackRock out here. We can see last time BlackRock had, that's a big old bearish engulfing candle. I mean, it has taken back, as we speak right now, the last 5-6 trading sessions by being able to get back into the April 7th candle session out here. BlackRock also, did it test that swing? It did. So the swing point that it's dealing with is February 17th. Only 1 million shares out there, the bottom of which is 377.80. Got up to an inter-session high today at 378.79. Versus, yeah, so it got into that swing point, but has backed off with decent volume. Looks like BlackRock here is just in a bit of a consolidation. That consolidation low being about 356.46. If it breaks through that, then price heads all the way back to the December 16th area around 334.60. BLK is the ticker symbol there. Pacira Pharmaceuticals. PCRX, that's moving to the downside this morning. It's testing a swing point. Wants to test the swing point low from January 6th. That price area is $82 even. Steven has not gotten down there yet, but looks like it will if it can bust through that area. Yeah, it's already got a couple of bad signals here. One of those signals was this hammer candle that formed back on the trading session of March 3rd, and it's below that hammer candle. It's never a good scene out there. That is Pacira Pharmaceuticals. Right now, we've got the Dow's off 38, S&P down about 6 points. Let's go take a look at gold, which is trading down $4. Silver off 12 cents. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 35. S&P is down 5. So let's go check in on gold and silver, see what they're doing. You've got gold off $6 here this morning. Gold, let me switch over to this chart right here, see what's really going on. So we take a look at gold. Hasn't really done anything since that the last full moon. So we have not seen an initiation move either to the upside or to the downside out here. Now, if we look at Stevie's chart, it's a little bit congested, so we're going to turn some of that congestion off. Let's do this here. Let's just leave it like this. So here's what we know about gold thus far. Gold had been in a very clear descending price channel out here. You know, why price stays within these channels, I can't tell you. I just know that it does, and I know that it's worthwhile for both you and I to identify them. Yeah, the prices are doing one of three things, right? They're either moving down, up, or sideways. And each of those have a different meaning. When things are moving down, yeah, means, okay, price is on sale. And when the question is going to be, okay, when are you done moving down? You know, you're done moving down when you can break your trend. You're done moving down when you see some volume off of the bottom, when you're gapping up, things along those lines. A wide-ranging bar, those are, if you trade currencies, you don't have any volume that you can use. And if you don't have any volume that you can use, then what are you going to use to make a determination what the bulls and bears are doing out there? That's where candlestick signals, Japanese candlestick charting, that's where understanding the size of a candle, understanding different nuances can really assist you. Well, if it can assist you in trading currencies, guess what? It can assist you in every other style of trading out there as well. Now what we can see here is that price inside gold came off of the bottom and started forming a rising price channel. I still believe that the price channel that I drawn in last week, the green lines, the diagonal lines going from lower left to upper right, is still in play out here. And what gold did, and it really shouldn't have, but it did, and there's that word shouldn't, here's what it did. It broke through that rising price channel. Now, it did that on April 14th. And then yesterday, what price tried to do was get back inside the party. It wanted to get back inside the rising price channel as if to say, I didn't really mean to do that. Will you forgive me? Well, the answer is, yeah, I would have forgiven you. But it couldn't break inside there. And even today, it tried to break inside there, couldn't do it. Now, gold has basically been doing what then? It's been basically moving sideways. So there's this other pattern out here, that's kind of really been in play, we'll say, since March 23rd, a bit of a sideways move out here. So what does gold want to do? I don't know. To tell you the truth, I know that it has not gotten to bearish mode just yet. That much I do believe. It needs to close below 1189.60 in order for that to happen. And then if it does that, it may only have a move down to about 1173 to 1179. It's A to B equals CD pattern that could be in play out here. I don't have a clear vision at this time. When it broke through the descending price channel, that's when things started to get a little bit cloudy out here. And I still say that that's what's going on inside of gold. Whether it's a manipulated market or not doesn't really matter. It doesn't really matter when it comes to a chart pattern recognition out there. That's what it's doing. And I'm not here to read the tea leaves. Really, just here to read the charts and tell you about the patterns that we're taking a look at, patterns that we can rely on to give us an indication as to what is going on inside whatever chart it is that we are looking at. We go take a look at silver out here. The case of silver, silver had been stronger than gold. Silver's back 13 cents, trading out at 16.15. Silver was also, now this is a weekly chart, let's switch to the daily time frame, was also in a bit of a rising price channel. It broke through that level, has not been able to break back into the party. Now, in the case of silver, it's come back to the breakout point out here. That breakout point really being that wide-ranging bar that took place on March 20th. Oftentimes what happens inside of an equity is, you get this kind of this initiation move. I'm not talking about the full moon initiation, just an initiation where all of a sudden large funds, because there's not enough of yous and me's typically to all join together to get things moving. We're all buying at the same time. That's coming from some funds that are, in the process of either trying to mark something up. But whatever, you see that wide-ranging bar, you see some accelerated volume going on. Now, the best thing to do for the U's and me's and I's out there is to wait for price to pull back to that breakout area. Sometimes it works out to the tick, to the pip, to the dollar, to the penny. Oftentimes it just gets close. That's why you want to use that as really a guideline. We've got a new trader inside our Tiger's Den. He's in a good trade to the upside here. Let's go take a look at it and see what it did on a daily, on a weekly basis. CLNE is the ticker symbol. So congratulations on that trade out there. Just make sure that you're managing the trade. What do we know about CLNE? Well, in the case of clean energy, this thing broke out with wide price spread and accelerated volume. It did it on February 27th. If you were the person that saw that taking place and you bought at that stage, you were kind of felt like you were sucker punched. Maybe you bought it up at the top at $6.25, only to watch it get down to $4.85. Stocks, when they break out, this is where volume is a very cool thing out here. What you'd like to see price do is find a sign of strength off of the bottom. It doesn't have to be right off of the bottom, but the very first time you see a sign of strength inside clean energy, CLNE, off of the bottom was on February 27th. It doesn't matter whether it was because of earnings or whatever it was. In this case here, the earnings date was the day before, February 26th, so probably after the close or before the bell out there. What we need to know is that it moved up with volume. That's a sign of strength off the bottom. What did price do? It came back to where it broke out. When the sign of strength, you go back to basically, the prior session of that break. That would have been February 26th. You look around, can you see a swing point that's in that area? And the answer is you can. So if we draw a couple of lines across my chart out here, this is to the bottom. Here we go. It'll be easier to see this as I blow this up inside clean energy. You'd be looking at this is the range here for price to pull back. Well, guess what? Folks, when price was pulling back in that area, it did it on March the 16th. They did it with 1.3 million shares. 1.3 million shares was going against 12 million shares. Was even going against the day that it broke out from on February 26th that had 2.3 million shares. It did it with light volume, and it gave you a nice candle signal, a nice little hammer candle that was formed there. That was your buy entry if you were looking to get into clean energy, CLNE. Price came back to the breakout. Now, it didn't get above this B point. point with volume. That had big volume, massive volume, 12.6 million shares out here. That doesn't matter. It just says, hey, it's a prop. Next time that it pulls back, you've got to watch what happens that high at 625. What we know about clean energy is it has some resistance area that it hasn't proven itself. That is really the next move. CLNE is going to try to make its way up to 757. That's the bottom of the gap, or 780. If it cannot close the gap, what I mean by close the gap is get above 780. Chances are, especially because this B point, we've only seen one sign of strength, so to speak, with regard to volume, probably comes back and tests $6.25 out there. If, on the other hand, it can close that window, close that line of resistance, that would be very bullish. I would say that line of resistance is no longer out there. And then you look to what? You look to the next swing point, which inside this equity is August 27th, and that's up at $10.20. The bottom is $10.02. Here's what I know with certainty. Always use stops, because no matter what we look at, fundamentally, technically, anything along those lines, you and I can't control what's going to happen next. The only thing we can't control is using what I'll call a one, what the industry calls a one cancels the other order. And every single trade that you have should be bracketed. You should have a target that, if it is fulfilled, takes you out of the trade, and you can go to Party City and have some fun, and you can always get back in on the trade out there. Likewise, you should have the other, and if that fulfills itself, your stop gets canceled. Likewise, if you have a stop and you get stopped out, then it'll cancel the other side of the exit out there. You should always be trading with a like you are trading the NCAA March Madness brackets out there. Always have a bracketed order, no matter what it is that you trade out there. Then you can sleep easy all the time. Easy peasy out there, and that's what it's all about. So congratulations on clean energy fuels, and just recognize you've got some work you done and put on those fasten seatbelt signs. Sorry, Al, I forgot to let you know I was going to go ahead and use that. But you've got to get on your fasten seatbelt signs. You probably ought to do it now, because you are approaching an area of turbulence, 757 to 780. And that's how you go ahead and you use volume. And remember, when we're using volume out here inside the market, just as anything else, volume is really only one element of the trade. Stevie says there's 4 legs to every table. That means there's 4 legs to every trade and everything that we look at. That means that volume is one of those. That's supply and demand. We just took a look at supply and demand. We looked at demand coming all the way back to the breakout level of clean energy. We look at it by both volume, price, wide-ranging bars. But you've got to look at momentum. Momentum is really important out there, and you can do that by using a series of different oscillators, stochastic, relative strength index, the CCI channels out there. I mean, you can use any of those that you want. Become a expert, a master of one. You don't have to become a master of all, because they all basically correlate and calculate the same kind of a thing out there. And make sure you understand liquidity. Liquidity being, volatility, Bollinger Bands are great, Keltner channels, standard deviations. I think that Daryl Martin's work on standard deviations is a beautiful thing out there. Really helps you understand volatility. And then you've got, none other than our David White Power Law Vector Indicator to really understand the energy of the angle. And that is really important out there. You can use other elements. Basil is a master of the MACD. He doesn't have to become a master of the Power Law Vector Indicator out there. But use one of those. These are the 4 areas. It's like any leg. And here's the nice thing, because when you remove one of these legs is typically going to fail. You want to understand what's going on with the other 3, because typically the entire thing won't fall apart out there. If you only used one thing, it's a balancing act. I don't know about you. Maybe I could learn to ride a unicycle, but I would prefer to have something that's got, 2 wheels. In this case here, when it comes to trading and investing, you'd rather have 4 wheels out there. So become an expert at supply and demand, volume. Become an expert at momentum, at volatility, liquidity. Become an expert at the energy of the move that's going on. It will help you immensely out there. Now, speaking of energy, there's nobody that has more energy than I do, wouldn't you say? Maybe you do as well. Of course, energy, that's an easy thing to, the unfortunate thing is we're only here for so many years on this planet. And man, as long as we're here, and I hope I'm here for another, as I told my daughter yesterday, another 75 years. I said, probably not going to be out there. And so I said, let me give you some words of wisdom. And of course, I'm pretty sure her response was, "Oh, Dad." That's probably what she was saying in the background. But at some point in time, maybe those words of wisdom will kick in out there. In any event, I don't even know how I got off on that track, but it's pretty easy for me to get off of a track here. Let's take a look at some of the gold equities, because we got a little bit of a divergence out here. Gold's only back $5, but I can see that Rand Gold, GOLD, is the ticker symbol out here. It is up about 90 cents, 309,000 shares trading places today. 309,000 shares is getting above the B point out here. If it's A to B equals CD, that had 811,000 shares. It actually got above it yesterday with 988. You've got a confirmed A to B equals CD, which it hit here this morning. It has done the 1-to-1 A to B equals CD. It's running into a little bit of a supply line. It's trying to close that gap. Rand Gold out here is trying to close the gap that was created back on the trading session of March the 4th. 76.14 out there. That gap has got 1.4 million shares. Do itself really good to have volume today of more than 1.4 million shares and close above 76.14. I would say it would go ahead and lop off that level of resistance out there. That's what's going on inside of Rand Gold. Let's take a look at Gold Corp out here. GG is the ticker symbol. That is struggling, as you can see, right at its gap. So very much like we just took a look at clean energy, you can see here's the area of resistance that Gold Corp is trading into. $20.03 is the first level. 20.46 is the second level. Now this thing here had gapped down with volume of 13 million shares. It's kind of like playing the game of war out there. You can have your lines drawn in the sand. You want to know where your front line is, where your back lines are at out there, where your fallback position is inside of Gold Corp. This had volume to the downside of 13 million shares. Yesterday was up with 8 million shares. Wasn't enough to go ahead and close that gap. Closing above 2046 will do Gold Corp a lot of good. A lot of good, meaning that price ought to get back into its swing points. It's 100% move by getting back into that January 21st level between $25 and $23.67. That's what's going on in a couple of the mining equities inside of the market. Euro, if we take a look at the euro versus the U.S. dollar index out here, the euro continues to reject that swing point low from March 16th out there. As long as it stays above 106.19, says that it probably just trades with inside this little consolidation, gets up to the 110 mark out here. We're not seeing any kind of sign of strength or anything off the bottom here inside of the euro. Right now, the Dow is off a full 6 points. S&P is down 2. We'll be right back. We'll recap what it is you want to be looking for at today's end.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
That's our fasten seatbelt sign, folks, in the markets. You've got the Dow's down 20 points. S&P is down a couple. So no big deal out there with regard to what the market has done. What are the things that you want to focus on and pay attention now? Not likely that you will see the VIX index close above the 50-day exponential moving average today. That 50-day moving average, by the way, is at 1489. You've got the VIX index trading at 1310. A quick math calculation says to me if it did close above 1489, you'd have a one-day rate of change greater than 10%, and you'd have a bounce tomorrow and or Sunday night in the market. Well, 1489 is still a level that you want to be watching. When the VIX index trades below its 50-day exponential moving average, the easiest way for me to explain that is there's plenty of liquidity in the marketplace out there. I like to look at this as a liquidity gauge because it has worked since it has worked for the last 6 years at least out there. And that when that goes ahead and diffuses the theory that a high VIX means anything out there. Because just as an example, let me see how far back I can pull this and actually show you what it is that I mean out here. How far? Here's 2009. Okay, let me show you the. Let me help you get rid of a fallacy. It's an absolute BS. It's an absolute before Steve fallacy out here, and that is that a high VIX means that the market is going to crater. Folks, it is used as a liquidity gauge out here. Learn to really use it. Take a look at here's the March of 2009 lows out here. And in March of 2009, just as an example, you had the VIX index up at about the $50-ish type level out here, right? $50. If a high VIX means that the market is going to crater, then what was happening for the VIX was traveling between $50 down to $30, down to $20. You see, what happens is once the VIX starts getting below that 50-day exponential moving average, here's March of 2009. Notice how price gets below it, and that acted as a resistance line, and the market continued moving higher out here. You see, a high VIX just means it's a math calculation, for goodness sakes. It's a math calculation out there. A high VIX just means it's a high VIX. The question is, where is it in relationship to its 50-day exponential moving average out there? It works really, really, really well. And that's really how you ought to use it. So that also means, and that's the other fallacy, is there's people that the expression is all over the place. The expression is that a low VIX means that there is no fear in the market. And that one bugs me a lot, because let's say you were somebody that was trying to get into the market, you were trying to take a long position in the market, and somebody says to you, hey, there's no fear in the market. The VIX index is really low. Does that sound like somebody's telling you to buy, or somebody telling you to be afraid of the market? They're telling you to be afraid of the market. But yet that same person will also tell you that a high VIX means that the market's going to crater. That's somebody that would basically never have you get in on the market out there. It doesn't make any sense out here. What makes sense is going and finding a pattern that works and works consistently well as a gauge to be able to help you understand what's going on. Use that 50-day exponential moving average. You'd be surprised. It'll help to keep you on the right side of the trade. You don't have to trade it as a day trading vehicle. And oh, by the way, those ETF structures that deal with the VIX, that's a whole nother 9 yards out there. That's one that's good for the being inside a straitjacket out there, because when you actually go see how those work, what most people don't really understand and recognize is most of those are based on the futures contracts. Here's all the futures contracts, by the way, inside the VIX for the last last couple of seconds out here. The futures contracts is what is you're trading. Don't be focused on the VIX index. If you're going to trade one of those other volatility tools out there, you better have access to the futures data. Otherwise, what the heck are you trading? In any event, enough of my dissertation, but you can pick up on more of that dissertation tomorrow morning at 9 o'clock, maybe 9:06 a.m. sharp. Have a great Thursday, folks. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.